Hello. Today I would like to show you a short selling trade with the stock Apple Incorporated. And more precisely, I would like to show you how to make an entrance, sell entry in this case with Apple stock, and where to put your stop loss and where to take your profit in this special case. And let me enhance this area up here so it's easier for you to spot and see what I'm talking about here. Okay. At this very moment, this is the daily bar today. It's red. And let's see the trade now. This is a trade I took for a couple of days ago. I saw this shooting star here, an inverted bearish hammer. You can see the long upper wick here, a small body, almost close red, and a very little wick on the downside here. So it's very less buyers here. The sellers are in control. So when I saw this, the next step you will think about is where shall I put my sell entry now? Well, to start with, always use the pullback strategy. And I recommend a pullback of between 50 and 70%. But let's say 50% is a very good round number, and you will get lots of entries using 50%. If you're making 60 or 70% pullback, you will lose some trades, depending on how skilled you are. You can also, of course, go to a lower time frame and try it from there. But in this case, we have Apple. It's a daily chart. We have a shooting star. And here we see a pullback. The price went down here. Then we have a pullback on the upside. And the 50% pullback strategy is that if you take half of this length, this top here and this bottom, 50%, half of it, is about here. So I had put my 70 sell contracts here, half of the structure here, and you can see that the pullback went up here and then went down in my favor. Let me click here so I can show you how it looks like. You can see that, damn it, what's happening? You can see here that I had a risk reward relation or ratio, 2.5. So I was looking for a profit that was 2.5 higher than my risk. And it works very well here because I took my profit here. You can see that my risk when it comes to money in this case was almost $205. And I'm looking for 2.5 more profit than the risk. So if I multiply this with 2.5, I get this sum and about $500. And I also saw that I really would like to stress this out, that when you're choosing your take profit level, try to get it at least 2 times more than your risk. And if you want to go for 2.5 or 3 or 4 times your risk, you really need to look at the candlesticks bar in a price action point of view and looking for where are the resistance levels and support levels. So you're able to take your profit levels that it's correct. So in this case, 2.5 is a good case here because I saw this. This was the former resistance level, which will be the future, the today's support level. So this level is not major, but somewhat a major support and resistance level. So I took my taking profit level here because it's aligned with the candlesticks bar here with the support resistance level. Because you can see it had some resistance with the wicks here, and usually, as we see also now, yesterday the price didn't want to go further down because of this resistance level. That was a support. That was a resistance level, which is now a support level here, where the buyers want to step in. So nothing happens yesterday, but today the price might go further on the downside to meet this level. This level at this bar here, exactly at the 164.82, is the next demand level where the seller wants to buy. So I think this Apple stock price will hit this region, 164.82. Then it will roll back, a pullback in this area, like 50% of this. This is also, this 50% rule is also a Fibonacci rule. It's very common to use when you trade. So this is a tips for you. So you can use this 50% pullback within one candlestick bar structure. As you see here, the entry was perfect. And when the price goes from here down to here, because this is the first demand level, you shall look for a pullback that is 50% between this level here and here. You can also use a Fibonacci tool to draw between here and here. But I have a good eyesight, so I can see that here is 50%, somewhere like here. So in this zone, you can put a sell limit order again with a pullback when it goes down here, pull back and down again. But I shall not talk much more about that. But this is the trade at this very moment. And also another tip, respect the moving averages. This is the 20 EMA. So that's also a reason why I didn't want to stretch this. I didn't want to have 3 times profit and risk, because I have a moving average here where lots of buyers stepping in. So if I would put my take profit level down here, I wouldn't get the first trade because it could bounce on the upside. And I don't like that. I want fast money. And I take the money and I leave, and then I take a new trade and get more profit. So that was that. And I would like to show you a currency pair, Euro Canadian dollar. The same strategy there. There we have it. Okay, there we have it. This is the daily time frame. And the last chart I showed you regarding the Apple stock was also the daily time frame. So here you can see shooting stars, huge one, almost nobody, long wick here. This is the second one, shooting star, long wick on the upper side here. This bearish. And you can see the price here went down there from the top, down there. Then the price went up there, pull back and down. This is today. So for example, I don't, let's be, we have 2 trades here. So using inverted hammer candlestick bars or shooting stars are so effective because you can see both of these times when you see this, I call them pin bars actually, then hammers, then inverted hammers. You can see the price went down good here, both times here. So it's very accurate. So let's see. Yes, we trade this one. I can show you the same strategy that I showed you with the Apple stock. So I also put a sell limit order here. Here, 10 contracts. I click on this, you can see how it looks like. So once again, I repeat the process. This is the structure of this bearish pin bar or inverted hammer. You have a pullback strategy that I told you about using 50% or 60%. I choose this level. So you have a pullback from here, up here. The trade went in about 50% or 45. It's up here. Yes, exactly. Here is the pin. So it's 50%. But I took it a little bit lower because I saw this wick here. So I didn't want to miss the trade. And also I saw we have a downtrend here. So I was pretty sure that I will get a good entry, even though if I take a pullback of 40%, like here. And it went in, and then we can see the trade went down, and I took my profits here. And the risk reward relation ratio is 2.4. So I strived to reach a profit that is 2.4 more than my risk. So my risk was 963 Canadian dollar, and 2.5 times that is 2,268 Canadian dollar approximately. And why did I choose 2.4 ratio now? Why not 2.5 or 3? Well, as I told you when it was regarding this Apple stock, you must look at the whole picture. You have very strong demand levels here. Sorry, demand levels here, where the buyers stepped in here. So this is an important horizontal line here, level to count with, about 130. Okay, 1.297. So I thought that 2.4 in ratio was a good choice because it also reaches and touches these two wicks on the downside here, where the buyers want to step in. And this case, actually, as you see, the price went below this here. So at this time, I could have a, let's see what the risk reward ratio would be like. If I had a magic crystal ball and looked like and knew exactly here, it would be 3.4 profits relative to the risk. But a very common numbers is 1 to 3, like this risk reward ratio, that you're looking for a profit that is 3 times more than your risk, 3 times this sum. So it would work here at this case, but it's not worth it to take that risk, because don't neglect this one, because the price perhaps only could go here or here, so you miss the trade. That was that. I can also see EURCAD is a very good currency pair to trade with because it's volatile and lots of wicks, which I like as a price action trader. So you can see, I can remove this first, so it's no, so there. Let me see here. This is 4-hour chart. Yes, there we have one. there. I'm looking for inverted bearish hammer or bearish pin bars. There we have one. And here we have a hammer, a bullish hammer. And you can see, same here. Let's say you see this, you want to go long. We have the 50% pullback strategy. I can see with my eyes it's here. And also, look at the big picture. Here again, you have a support level here. So you should take your entry, your buy entry, when the price goes down as a pullback strategy I was mentioning about. Have 50% pullback in your mind. Don't forget that. But also look, this is also very important. And in this case, we can see that my 50% pullback from here to middle of the structure of this pin bar here is aligned with this line here, demand level here. So here I would put my buy limit order at 1.304. Okay, 1.304, and go back and watch it. Yeah, there it is. So this is what you should do when you see this long wick bullish bar here. Pullback strategy 50%. You have a buy limit order here. It goes in here. When it goes down, you have your order and you put your stop loss with a little bit room. Don't put your stop loss this close to the wick, because institutions and banks, they know where retail traders and amateurs put their stop losses. So don't use this free pip advice distance here. No. You will get stopped out very often, especially when this 4 hour time frame. It's more safe to use the daily time frame. So this is 4 hour chart. So put your stop loss like this. Don't be greedy and have ice in your stomach. I would recommend this stop. Have this distance, because you will get less stop out using this strategy I'm telling you now. So don't be greedy. You do like this. And then we can see, like, you have a risk, in this case 900 Canadian dollar, and twice that is 1800 is yes, 1800 Canadian dollar. But in this case you can see also here, let me see, yes, 1.2 to start with. Okay, you can see here risk reward ratio. Here we see, oh, this happens sometimes. Okay, now you can see here the reward taking profit in this case is 2 times higher than the risk. We have 1 unit of risk here from the buy entry, stop order. This is your risk. And in this case, you have a profit that is 2 times higher. And yes, it went in here. But I would look for a higher risk reward ratio than this one in this case, because you can see a good bullish bear here, bar here. Sorry, not a bear. They are in the woods, I hope. But also using these moving averages. In this case, this is 20 EMA, 50, 100 EMA. And You can see a kind of squeezer here when the 20 EMA is squeezing up. And also we can see wicks here, so I can see it would be a breakout trade. So I would put my take profit level higher than this. And let's see on the left side if you can see any levels to go after. No, not here, because here is a level. That's not a good one. Okay, not in this case. It was no help to look on the left side. But in this case, you can also just thinking like, well, two times the risk, that's too little in this case. Because it has actually, the price has hit this 100 EMA before, here once, twice, three times. Okay, so let's look. Yes, so I think I would choose this one this week here. Yes, 2.3 times your risk taken. Yes, you could of course look at this one here, like this. Take your profit here, not here, because you have to pay the cost to the broker for the trade. So you must always put it a little bit down there. So like this also. But in this case, you would lose it because the price went up here, not exactly to this level. So 2.7 was too high. I must often using two times or 2.5. I like those numbers actually, because it's very often I got my take profits level. The price very often reach my take profit level. So that's my advice for you, to use 2.5, striving for that 2.5 more profit than risk. And in this case, you can see you get the profit there when it went up there. Or you want to have a fast money, you choose the two numbers here, twice here, risk ratio here, two times. But okay, you would miss it here. So, but well, the price is. I mean, in this situation is different. So okay, that was that. I also know. I think that enough for today. I hope you understood my pullback strategy of 50% of the hammers or pin bars. That is a very good entry. And then you take your stop losses, not too tight, not too close this week, not put your stop loss like here. Look also at the left side. So here it's a good one to put your stop losses above here, above here. So it's also above this structure here on this side. So here should your stop loss be here. And then you take 2 or 2.5 in risk reward relation. Okay, thank you. I hope you have enjoyed this video. Bye for now.